Last November, we refreshed, as we usually do every end of the year, our secular outlook. At the time, we didn't know about the coronavirus and what would eventually happen at the beginning of 2020. But strangely enough, several of the trends that we've highlighted for the first time for the decade 2020 seems to actually already start. One of them, for instance, was the shift towards non-orthodox macroeconomic policies. It's true that in many respects this crisis is unlike any previous one. But paradoxically, investors should not become short-sighted. They should really keep a long-term perspective because we tend to overestimate short-term change and underestimate long-term change. Their strategic asset allocation is their anchor. They might review it once or twice annually, but any change you do to a strategic allocation should be well thought. Of course, in moments like those markets are going through, the temptation to reduce risk and limit the drawdown in the short term is extremely high. It's precisely in those moments that we should remember we cannot control the short-term direction of the market. We are rewarded to accept those risks in the short term with superior long-term returns. And if we miss strong days, strong weeks, or strong months in the market, we will eventually significantly impact long-term returns in portfolio. Every decade ends and eventually start with a major crisis, like the financial crisis in 2008, like the boom-bust cycle of the dot-com era in the late 90s, early 2000. And these crises shape the decade to come, but there are eventually good times ahead. After this drawdown of unprecedented speed, relative asset valuation have moved to recessionary times extremes, meaning the price of quality in portfolio is at a record premium to lower quality assets, and that's probably true to a large extent both in the equity space and the fixed income space. Because that risk premia, that value risk premia is very high, it might be tempting also to jump into it. But we think it's premature for a couple of reasons. Number one, it might persist for quite some time and will go through several ups and downs before the economy recovers and market reflect that. And second, we are to an unprecedented extent a stage of policy decision. So some companies might eventually be helped by policymakers to a greater extent than others. And government intervention in markets and the economy will also be very, very high going forward. Therefore, we cannot apply the usual mean reversion logic to value situations. Don't catch falling knives. One of the calls we made in the secular outlook is for a bipolar world where we experience a Chinese-led economic and financial cycle coexisting with the well-known US economic and financial cycle. There again, we are fast-forwarding toward that new world. And more than ever within China, who's been hit first by that pandemic, but has reacted very swiftly, is also the first economy to recover, and more than ever, China is a core asset class, standalone in portfolios. We also carved out life science disruption as an extension of technology disruptions. Of course, we never imagined at the time that the virus would disrupt our life in anywhere near the way it did in the last few weeks. But this highlights the merits and the importance of exposure to healthcare teams in portfolio across a wide range of things, but in particular biotechnology, and also very critically, all the digital enabler in life science, all the companies that facilitate the transition towards a digitally enabled data-driven healthcare industry. After the initial surge in volatility, above 80% on the VIX index, we've come back to slightly lower level, but still very high one in historical perspective. You get rewarded a lot to sell insurance today, and we think investors should take advantage of that market paradigm to cash in attractive risk premia on volatility. Last but not least, sustainability was already a major mega trend before this crisis, and given the consequences one can foresee on the economy, on social life, on politics of this pandemic, more than ever, companies behaving in a responsible, sustainable way are likely to outperform going forward. It's not a blip, it's a trend.